What's up, everybody? Today we're talking about acquisition, self-storage acquisition, and your 5 biggest mistakes that you make when you're acquiring a storage facility. All right, I love producing this content for you guys. I love developing this culture. Self-storage income is just taken off. If you guys could like and subscribe to my YouTube channel, that helps a ton. Please comment below other subjects, because I'm just taking the subjects that you guys are the questions that you ask, and I'm taking these subjects and producing content for it. Reach out, go to selfstorageincome.com to talk to us, email us, and also visit the podcast. So the podcast, we have years of content on that podcast, great reviews, and we're putting out more that talk more about this. All right, that's my little pitch. That's my ask. Like and subscribe. Now on to the 5 biggest mistakes in self-storage. The number one mistake is not getting a phase 1, phase 2, or a geological survey done on the site. The reason why this is a mistake, you don't know when the site was built, you don't know what's on the ground, and if the previous owner didn't have, you don't know what problems there may be. Now, this is an important one, a really important one, and you would be surprised when you're buying facilities, even big ones, multi-million-dollar facilities, the problems that can arise. I'm going to give you an example of something that happened to us. We were buying a facility. Well, not buying. We were looking at buying a facility. When we went to the facility, we're walking around. There was some cones because they needed to do some maintenance. It's pouring rain outside. There's a hole in the ground. Now, the water's coming from the facility down, and it's pouring down this hole. And it's just crack, hole in the ground. So we asked, where's the water going? Walked around the facility. We couldn't figure out where the water was going. It wasn't coming out. And this is like massive river flow. This is not a small flow. We couldn't get an answer. He said, it doesn't matter. I'm just going to fill the hole and take care of it. It's like, well, this is a waterfall into this hole. We asked for some geological surveys done. The owner didn't want to do it. So we decided to do a little homework. We went and found that this facility had been built on a sawmill. Basically, a massive pile of sawdust. The water was going into the ground, and it wasn't going out anywhere. It was just going under. This was huge red flags. We asked the owner to do a study to find out whether the water was either soaking up, whether there was a hole or there's an issue, and he refused to do it. The reason being is if he had to do it, he had to disclose that to any potential buyers. We obviously walked away. He did sell that facility 2 months later, and he never disclosed any issues with the facility, nor that that facility had been built on top of a lumber yard and basically sawdust. It's important to do these phase 1s, phase 2 studies, and your geological surveys, because without knowing what's on, future problems that you can have, which could be devastating for that asset, you can get in trouble fast. There's so many unknowns. And a lot of times that will destroy your chances of not only getting finances, but operating your business, and can get your site condemned. There's no reason to even go down that path. Get them done. Number 2, getting a feasibility study done. A feasibility study will tell you about your location. It will tell you about the viability of the market. It'll tell you about the self-storage market there, supply, demand, very relevant topics on how that asset will perform in the future. It will let you know if there's other storage facilities coming in town, or maybe the population is decreasing. It will tell you how they think that this market is not only performing today, but in the future. This will give you a good idea when making your projections on your revenue and how much you will be able to up rent and chart those things out. I've gotten feasibility studies done in my own backyard, even after owning millions and millions of dollars of assets, because I wanted a third party to tell me what I was missing and to verify my thoughts on the market. It's so important, especially for people getting started. Get a feasibility study done. Number 3, understanding your competition and understanding future competition. This is a big one. Understanding your competitors in a market, a lot of people in self-storage don't think about. The reason they don't think about is because they just feel like it's either you'll build it and they will come, or it's an existing asset and they think that what's happened in the past will continue in the future. That's not true. In fact, I think that the biggest threat of self-storage is self-storage. Markets can get overbuilt. And if you're in a market that is not growing and you have a lot of competitors come into that market and oversupply that market with inventory on units, it can make that project really not perform. It can stagnate your ability to give rate increases, and you can see vacancies rise, and it will be a massively underperforming project and hopefully not go under. So it's important that you understand what competition is doing, but also too, how you're going to compete. What is being offered? It's amazing when I ask people what units they decided to build or what units they have and how they price it. There's not really an answer. They basically said, well, I think that this is good in the marketplace. Sometimes this means that they have priced either too high or too low. I find people that price dramatically lower than they should in the market because they have the only unit, particularly when this comes to specialized units like wine storage or climate controlled. It's a lot of missed opportunity and a lot of danger not knowing your current competition and future competition. Number 4, hiring professionals. This is accountants, attorneys, and these are people that will help you come up with a purchasing price to acquire that facility. When looking at a facility, they're based on cap rate. This has a lot to do with the revenue produced from the asset and the expenses. And ways that can overprice or underprice an asset will depend on that net income and how they're coming up with it. Understanding the tax implications of that asset and understanding how that's going to play out. This is really, really important because if you overpay and then incur higher expenses, the spread can kill you. You need to make sure that your expenses on that facility are correct. A lot of people think this is a no-brainer, but then they don't count in for the adjustment from the counties on taxes. It's one of the biggest mistakes we see, which that could easily have been avoided with a CPA or a representative of the county to tell them how they're going to increase taxes over time. They're buying an asset and they're looking at the expense line for tax income at what that asset is taxed at. Well, in California, for example, that's set at whatever the owner first built it for. Maybe that asset was built for $300,000. They're going to readjust that assessment at the purchase price. And maybe you're buying it for $2 million. That tax increase is going to be massive and it can kill any profitability you have. So finding attorneys to make sure your contract language is good, to have accountants tell you, to have feasibility studies, hire professionals, surround yourself with a great team that can make sure you execute properly and you're getting the deal that you're thinking you're getting. Number 5, going cheap. Now, this may mean everything from the site location to the quality, whatever needs to be done at that facility. Cheap just doesn't work. This is about presentation. And a cheap site gets cheap tenants. Don't forget that. Quality sites, you can outperform your revenue and what you charge all the time. How you present it, having a cheap website that isn't dynamic, that doesn't allow online rentals, will miss a huge part of the market and a lot of the highest paying tenants. Don't go cheap, both on your physical location and your online location. Okay, we talk a lot about acquisition. Those are 5 things to make sure you do and pitfalls to avoid. Please like, subscribe to my channel, leave some comments, comment section on other things that you've seen and other pitfalls to avoid when investing in self-storage. Let's continue to help the community grow, get great assets, and be extremely profitable.